Hi guys, welcome back to my channel once again. And today being the 25th of June, I quickly want to show you guys what is happening in BTC. I know a lot of people really want to know what the next move will look like. So I want you guys to look at what I'm about to share. It's pretty straightforward, and I think everyone need to see this. So first thing first, what I'm going to do here is okay, let me get to the chart now. Look at what I shared on my Twitter yesterday morning. I shared BTC level on my Twitter yesterday morning. So okay, let me remove this. So I'll go through that and I'll show you guys what we need to look out for, which is very, very important here. So my Twitter, I looked at, okay, I went to the 1 hour time frame and I looked at this major move here. So we're looking at this price action here. We have the body of the candlestick here, resistance here, created our first resistance. We've got that second resistance here, and we got this rejection here, and it came back inside. Now we're getting the breakout above this level of resistance. Now the body of the candlestick has closed above this resistance. Now we'll likely get this holding this level and to continue to the upside. It is very important to be careful about this level. Now the major things I want to share with you guys now, they are this. So now first thing first, I want to look at two different chart patterns here, and we need to be very careful about how we trade this. Now the first chart pattern which you're seeing on my screen here, it is called the right angled and descending bordering formation. See, it's a chart pattern, and it is called a bullish continuation chart pattern. Depending on where you're seeing it, if price is moving up and it formed this chart pattern, it is called a bullish continuation. And if price is coming down, just like what you're seeing here, and we get this chart pattern, if it break out to the upside, it is called a bullish reversal chart pattern. So now, what do we need to know about this chart pattern? The first thing you need to know is that price trend leading to this chart pattern can be either up or down. So what I'm trying to explain there is price trend that's leading to this formation can be either down or price moving up. So here, price is moving down, go to this level and maintain this level of support and resistance. Now, the next one now is this. The top trend line is always horizontal, while the bottom trend line is always down sloping, which is the support down sloping, and the resistance is horizontal. So we need to understand this very well, and at least we should have like 5 touches. Like we should have like 3 peaks or 3 valleys, so it will complete 5 in total. Now the breakout of this has a percentage of 65 to the upside. But what we need to know is this. We need to be careful about how this move back to the upside. Now, take a look at the resistance which price is holding. Now, look at this resistance here inside this chart pattern. I'm going to draw this resistance. You can see what is happening here. You can see this. happening here. So you can see the resistance, which is the body of the candlestick here, the body of the candlestick here, and you can see it tried to test that level, violated it, and went back up. Now you can see it tested that level again. Now price is here, so we need to be very careful. We want price to leave this zone and move to the upside. It is very, very important. We pay close attention to this level. And one thing about this chart pattern is if you want to follow this chart pattern based on how it is being explained, said when price touches the bottom of the trend line, which is this level around here, the third time, and you see that price has begun to rise to the upside, it is advisable to buy. But I would not really advise anyone to buy, because you never can tell what the market will do. And why I would not really advise anyone to buy is because of what's also forming again in the second chart pattern, which I would explain. So now, if this continues to hold, we're going to get a push to the upside. It is very, very important price breaks above this level of resistance. If price doesn't break above this level of, and take note of that, when I say price must break above, what I'm trying to say is that the body of the candlestick must close and stay above this 1, 2, and 3. You can see the body of the candlestick have not broken this horizontal resistance. So the body of the candlestick must break this resistance and stay above. So it is very, very important. And I will tell you guys why this price, if price moves back up to this level here, it must break above, which will take me to the second chart pattern, which everybody knows. So now I'm going to do this way. Okay, I'm going to do it this way. So now what we're seeing here is head and shoulder chart pattern. And I get a lot of people are saying this is not head and shoulder chart pattern. And I'm going to explain what I think would likely happen. One, I'm going to look at this in two different trends. The first trend would be the bullish continuation, and the second one would be a strong bearish reversal chart pattern. Normally, we know that head and shoulder top is called a bearish reversal chart pattern, depending on how price is moving to form that. You can all see that price is moving upward to form this. So it is very important to understand how to play this very well. You don't really need to rush into the market and say, okay, hey, it has broken down here, so let me buy. No, you need that valid breakdown. So now let's look at okay, let me use this to explain it very well. Okay, I think this is okay. Let me use the daily time frame here. Okay, so now let me use this. I'm using FTX exchange price to chart this. So now let's look at this very well. So first thing first, we want to see this price. I don't want to see price rejecting this way. I want the body of the candlestick to close below this upsloping support, which is as well called the neckline. So we have the left shoulder here. We'll have the head here. It's a big one. Have the head here. Now we'll have the right shoulder here. So it doesn't matter how it looks, but we want that shape. So the first thing I'm going to talk about here is I'm going to talk about the bearish reversal chart pattern. That's why I was trying to explain to you guys that price, the body of the candlestick, must close above this level. You know, we had a level around here, so it must close above this. That is why if it doesn't close above this, or we'll get a push back down from here, this is not going to be funny. So what is the target? I want to take the target and I want to sorry. So if I want to take the target and I want to a little bit adjust the take profit level, I don't want to take it from right from the top here. So I'm going to take this and drop it below here. So we'll be looking at a major target of 15K. So we're going to split that target to the downside. Now take note of this. I'm not saying it's going to drop. What I'm saying is if it doesn't move to the upside to break some strong resistance, then we're going to get that push to the downside. So we need to be prepared. Now, that is what we call a bearish reversal chart pattern. Now, in one of my videos, I explained how you can identify or understand the bearish reversal, the bearish continuation, the bullish reversal, and the bullish continuation. All chart patterns have its own bearish reversal and bearish continuation, bullish reversal and bullish continuation. This chart pattern is called a bearish reversal chart pattern. Why? Because price is moving up, leading to this chart pattern. Though I'm going to drop a video explaining this chart pattern. Now, when do we call this chart pattern a bullish continuation chart pattern? This is when we call it a bullish continuation chart pattern. And that is why I said price or the body of the candlestick must close above this horizontal resistance. Now, look at this. Look at this very well. A lot of people don't know this head and shoulder chart pattern can also, in turn to a bullish continuation chart pattern. So now look at this very well. This is what we want. This is what everybody wants, because I think everybody are trying to stay bullish. But one thing about the market is the market don't care about your sentiment, only played by the bulls and the bear. So you need to follow the trend. If the trend says down, you go down and make a profit. If the trend says up, you go up and make a profit. So now we're looking at this horizontal resistance here. Now, this is why I said this should break this resistance. The price must, and I quote, must break this resistance. Why? If it breaks this resistance, we'll get pushed to the upside, and I'll show you guys how to calculate that. But if it doesn't move to this upside, or try to move to this upside to break this resistance, we're going to get those targets to the downside. Now, what are the targets to the upside? If, take note of that word, if it breaks this resistance, we'll see, take this, measure this. Now, that's why I said it must break this horizontal resistance. If it breaks this horizontal resistance and it closes above there and stays there, which is the body of the candlestick, this is the target we should be looking at. So normally you want to calculate this. You take the height from here down to the neckline and you put it at the top of the resistance. So why we're putting it at the top of the resistance? Because anything below this level is invalid. It is going to push back down until we get that push to the upside. Then we'll get this target. We're going to get a gradual target to the upside. So this is what we call a bullish, a bullish continuation chart pattern. If the body of the candlestick closes above the resistance of the right shoulder. That is when it will turn to a bullish continuation to the upside. So I hope you guys fully understand what I'm trying to explain to everyone. So for now, price is within this range. If it doesn't get that strong push to the upside, we all need to be prepared to take this trade to the downside. Don't be scared about the bear market. You can make profit in the bear market the same way you make profit in the bull market. You just need to understand what you're doing. So guys, that is just what I want to share with you. If you have any question or you don't understand what I've really explained, okay, I think I will need to look at this, my favorite indicator. Okay, here again, I'm going to delete this. Let me just quickly look at this. So, again, one thing we need to pay attention to is when price has been pushing from this level to the upside, one thing you see that will make you believe that, okay, we'll get this strong push to the upside is the TK bearish and bullish cross. So we'll call it TK recross. So when you get that recross above this cloud, it gives you a strong move to the upside. Now, we're getting that recross here again. And I mentioned this earlier when we got that head and complex head and shoulder here, which broke to the downside. I mentioned that anything below the cloud, to me, it is totally what? Bearish. So now, if I remove the price, now you can see we're having that recross, and we're having that recross here again. You can see the blue EMA is the Tenken. It crossed the red from bottom to top. That is a bullish cross. Now the momentum wasn't too strong, and you can see it's crossing it back to the downside. This is what we call a bearish TK cross. So for now, I'm bearish until price moves above this cloud. So we need to be very, very careful. So that's just what I want to share with you guys. So in my next video, I'll be talking about the head and shoulder chart pattern so that everyone will be able to look at it and understand what I have just done today. So guys, if you have any question, please chat me up on Telegram, follow me on Twitter, and you can also ask me a question on Twitter as well. I'm available anytime. And also don't forget to subscribe to my channel so that whenever I drop a new video, you guys will get a notification. So guys, happy trading and stay safe.